Now we'll look at technology and innovation in Africa. Investors and venture capitalists looked at how the U.S. government and the international community can encourage entrepreneurship and investment on that continent. This portion is just under an hour.
All right, everybody, we're ready to get started. Please join me in welcoming to the stage Truman Fellow and co-director of the Africa Expert Group, Rose Jackson.
I'll pay you later for that one. For much of our lifetime, sub-Saharan Africa has been treated and described as a charity case. For governments, a problem to be managed. For businesses, a troublesome but rich source of natural resources. And for the general public, a continent, or sometimes a country, of crisis and hunger. While that misperception has only recently begun to change in the United States, young technologists and entrepreneurs in Africa wasted no time in defining their own world, spinning up businesses and new technologies that are breaking ground in Africa and beyond. Last year, the continent was home to 6 of the world's 12 fastest growing economies and the world's fastest growing middle class. While systemic barriers like corruption, poor infrastructure, and a mismatched workforce still remain, the hype around the continent is growing. We've brought together a great panel to explore what tech innovation means for the future of Africa's economies and why people in the United States should care. Today, we have the privilege of hearing from 3 distinguished panelists who I will briefly introduce and then let my colleague Rob get to the fun part, but first perhaps I can invite them onto stage. I'm trying to avoid the awkwardness of the single person standing. First, we have Jonathan Berman, founder of the J.E. Berman Associates, who is an investor and advisor primarily working with businesses with high growth potential in emerging markets. Previously, Mr. Berman served as partner and director of the corporate practice at Dahlberg and also authored a book called Success in Africa about the CEOs doing business on the continent. Next, we have Carolyn Campbell, we're going a little out of order right here, who is a managing director and the founding partner of Emerging Capitals Partners, which is a leading private equity firm focused exclusively on Africa. It has stakes in everything from education, media, and internet companies to the famous Kenyan coffee chain Java House, and let me just take a second to say thank you for that. John Gossier is a TED Senior Fellow and the co-founder and CEO of Audigent, an audience intelligence company. Mr. Gossier is perhaps best known for founding Africa, a Uganda-based tech incubator, and has spent the last decade serving as a data science and international business consultant to global companies and organizations and parts of the U.S. government. And now I am pleased to hand this over to Truman member and Africa Expert Group co-director, Rob Tashima, the suited man with the tie clip. Rob is the Africa Managing Editor for the Oxford Business Group, an emerging markets advisory firm, and an advisor to Asoko Insight, an Africa-focused corporate data startup. Given the expertise in this group, we're in for a very interesting conversation. I will waste no more of your time and welcome the panel to begin. Thank you.
Thanks very much, Rose. It's very exciting, I think, that we can all agree that we're actually talking about Africa now. After several hours of foreign policy discussion, finally the continent is getting some overdue recognition today. I hope everybody's had their cup of coffee for the afternoon, because we are hoping for a very lively discussion. So if you haven't had any, go out and get some now. I do believe the beans are actually from Africa, so it's thematic as well. Technology certainly looks as though, as Rose mentioned, it's played a central role in Africa's recent growth spurt, whether we're taking a look at the boosting of remittances, improving financial inclusion, supporting teachers, supporting farmers. And whether you're looking at Nairobi or Lagos or Joburg, you can find plenty of examples of success stories like Jumia and Iroko and Ushahidi. And all of these were involved in things from video streaming to election monitoring to e-commerce. But the big question is, how have these technologies actually impacted the daily lives of everyday citizens? And what are the sort of constraints that are limiting their impact on development across the continent? And equally importantly, what role is the U.S. playing, either in the public sector or the private sector, in terms of helping to leverage technology as a tool for prosperity? So with decades, obviously, of experience in Africa, we've got a great panel here with Carolyn and the two Johns. And they've got plenty to say on this issue, so I'm actually going to stop talking here and go ahead and get started. We've got a lot of ground to cover. Just to get things going, I'll start things off with a couple of questions, but we'll open it up to the Q&A from the audience later on. So the first question that I'd like to ask all of you in turn, and Jonathan, we can start with you, is to what extent do tech programs, startups, tech companies, and tech initiatives actually play a positive role in encouraging development? To what extent have we actually seen that concretely? We've certainly heard a lot of hype about that, but is that translating to action on the ground?
Yeah. I think so. From a commercial perspective, I think that there is a lot of hype, and I think there's a lot of reality. So first, let's dispense with the hype. Let's clear the Aegean stables first, right? So there is a abundance of development and donor excitement around technology and investing, and that excitement is expressed not only in a lot of hyperbole and speech, but also in money that I perceive as going sometimes towards programs that are not sustainable and certainly not commercially viable, and in some cases as a result drawing talent away from more lasting, in my view, commercially viable investments. I think that you also see sort of a proliferation, for example, of incubators around the continent, which in my view is probably a little overwrought. There are a few that do great work. There are a lot that I think just sort of exist to my mind on fumes. So I think that there is certainly room to call that effort. But the reality is that there is an extraordinary amount of innovation going on in Africa that now is getting some of the capital that it needs, both from somewhat from domestic sources, but significantly from international sources, including Silicon Valley now. And there are innovations coming from Africa that are finding their way not only into impact in Africa, but impact around the world. I mean, one of the things we thought about is there homegrown technology coming out from Africa elsewhere, and there certainly is in the area of internet security, in terms of safety and certificates. VeriSign is built on technology that came out of Africa. In terms of open source software, Ubuntu is a Linux-based software program that's used by millions of coders around the world that comes out of a South African company. And there's I'd say still a small but growing set of additional technologies coming from there. So there's a real reality around that technology. You asked about the impact. I'll leave it to others to discuss sort of the developmental impacts. I'm no longer much of a development expert, but I'd say that there is growing commercial impact, and that's what I find. And frankly, as I think some of the other panelists might concur with, to me that's ultimately the most sustainable and compelling impact there is the creation of jobs and productivity and profitability that be extended over a broad inclusive base. And we can get a little more into some of the technologies that are doing that.
John, you've been obviously involved in much of this, sort of on the kind of front lines in a sense, getting involved with app development in places like Uganda. Are you seeing that sort of thing? Are you seeing that sort of proliferation of commercial opportunities as a result of developments?
Yeah, I mean, so from my perspective, the goal has always been job creation and creating sustainable opportunities for employment. And so when I look at this sort of like growing tech sector across the continent, these growing incubators that are sometimes donor supported, it's the benefit that I see is that these are jobs that are being created locally by local entrepreneurs who are employing local talent. And because they can survive on local and sometimes international ecosystems, they are truly sustainable. Like, these are jobs that won't go away when, some organization decides to pull its funding from the region. And so that's how I've always looked at it. It's never really been about the tech or the, or some of the other things that occur in the sector. It's just about how do we create opportunities for the people there that are talented, that are very self-motivated, et cetera. The other thing I was going to mention, you touched upon, I think, just a second ago, is the opportunity for African technologists and technologies to sort of support global demands. And so the company that I started while I was in Uganda, I moved there in 2008, and it's still there, still doing well. We do have a sort of incubator / co-working space. But from day one, we had a business model, which a lot of, we've tried to encourage other people to adopt, which is we actually service companies with our talent that's there in the space. And so this is a space called Hive Collab in Kampala, Uganda. And so now with my new ventures here in the States, I actually can outsource work to my team in Uganda, software development, data entry, data validation. It's actually been quite economical and, sort of set an opportunity I didn't expect when I started the company 2008.
Well, that's a very old company.
2,000 years and 8. I didn't expect, then that I would still be doing business with my team there, so many years later. So it's been pretty exciting.
Okay. Carolyn, you, as a sort of big private equity fund, you guys get involved oftentimes in a lot more established firms, and it's, I think sometimes it's worth reminding folks that tech is not just kind of nimble startups and incubators and accelerators, but often much bigger companies as well, and Emerging Capital Partners has stakes in things like ISPs and internet companies and telecoms providers like IHS Towers. To what extent are you seeing this kind of excitement over technology also playing out on the grand scale with these bigger companies?
Yeah, so we've done some small investments, some startups, remittances you mentioned, and that's a high growth, highly competitive industry, but you look at flows between South Africa and Zimbabwe, and we've invested on our own balance sheet, not with our funds in that business. We've looked at Jumia, and we've looked at the data centers, and those are all sort of on the fringes of what we've done. But what we really have done, and we've made over 60 investments and sold 34 of them, is ridden 3 sort of big technology waves. The first one was GSM. 2% of the continent had any sort of connectivity, and we did that from 2000. That was a very easy fund to invest and to exit and make money on, and that was easy. Then the second wave we have done was the cable companies. So the major shift for Africa was the landing of the submarine cables. You had 3 big ones come to the west, 3 big ones come to the right, and that allowed them to enter the world of broadband internet and everything we do. So they want to be connected in their homes to high-speed internet and go outside and have 4G, and everybody has 2 or 3 phones there. So we are in the cable business, the pay TV business, and the broadband internet business in Kenya, which we're expanding in East Africa. And then the third one is the cellular towers. In 2011, we bought a company that had 727 cellular towers under management, because the cables come to the coasts, but you have to get it into the terrestrial, the center of the country. And even, you land in Nigeria, you have to get it into Lagos and the big cities for the real change to occur. So you have to supplement that with satellite. And our cable company also has a DTH, direct-to-home part to it as well, just that you're covering everybody. But we grew that company since 2011 from 727 towers to 22,000 towers. That's a pretty high rate of growth for a company in a small amount of time. So what happens on the backbone of all this connectivity? Well, we have a financial services company, and we bought 6 really remote licenses in places like Chad, Gabon, Togo, Benin, and that was very exciting, but we didn't buy them really for those countries. We bought these licenses to then build them into bigger countries and make a banking platform. You've all probably heard of EcoBank, but to recreate that model. So then with that platform, we acquired a group that had Ivory Coast, Senegal, Burkina, and some other countries further up the coast. But how do you build that out? You're not going to put in the bricks and mortar banks that we have here in the U.S. That's not a real viable solution. And there isn't really the infrastructure for that. But the mobile telephony and all the mobile banking products, that has really enabled our growth. And that company has grown exponentially. I think it grew its net banking assets 10 times in like 2-3 years initially. So on the back of the real connectivity and the real penetration of the entire continent through all these forms of ICT, yeah, we have a lot of businesses that are spawned by that kind of connectivity. I can't think of any of our businesses that aren't. Every business we buy, the first thing we do is put in a new ERP,
right?
And enterprise resource procurement system, and that requires connectivity. So, yeah.
I mean, I think that's you raise a really interesting point about how Africa has really changed over the past 15, 16 years in terms of going from, sort of 1% mobile penetration to
80-something.
Yeah, 80-something. So it's gone, it's basically the population of the U.S. times 2 has gotten mobile phones over the past sort of decade and a half in Africa, which is pretty impressive. And certainly the cable connectivity to international cable networks plays a big role in that. But you had touched upon the importance of bringing, you've got all this gateway connectivity. So Africa all of a sudden has access to terabytes and terabytes of internet connectivity, but getting it to the inside of the country of the countries is a big challenge. So I sort of wanted to ask actually all of you, what are the sort of challenges that if you're a tech startup company in Africa you have to deal with, and more importantly, from the kind of U.S. government, U.S. private sector perspective, what can we do to help alleviate some of those concerns? Jonathan?
So I'll leave it to someone who has an African startup to talk about the challenges that they face. But I'll think of two things around capital and connectivity. Why don't we talk about those, since I'm sure that whatever else John enlightens us with, that'll come up. So I do think that, especially in the short term, American sources of capital are quite valuable, particularly at the venture stage, all the way from seed through late venture, getting companies ready for Carolyn to buy up. Is something that's particularly useful in the current phase for a variety of reasons. I mean, I don't believe in investing without domestic capital alongside. I think it's kind of it's an important proving point. But for a variety of reasons, African capital has been slow to mobilize around around soft technology and around venture. So both, for example, software and venture. Are just very new spaces for African capital. So, giving them in return the confidence of major global technology investors and major, particularly software investors, is a big boon, and allowing them to come alongside is, I think, a significant play in the next several years for America. And frankly, since we're talking to largely an audience of public servants, it's a phenomenal differentiator between the U.S. and any of our competitors for regional power. Because there's no one that can compete with the U.S. in terms of either the know-how about how to invest in that or the fluidity of our capital to invest in that. If you think about where Europe is literally today, and where
was.
No, I think they're in worse shape today than they were yesterday. And certainly London, which has been a source of capital, I think is going to face a lot of challenges, right, in the next couple of years in Africa, across the board, across all forms of capital, but particularly on venture. And the Chinese actually are quite competitive in this space, but they're a little late to the game. We still have, the U.S. brand around venture capital just can't be rivaled. And so the opportunity to come in there to establish a presence in the continent on topics that are of high interest, not only to populations, but especially to governments, is significant, as opposed to, let's say, and I may be saying something contrarian here, but as opposed to infrastructure capital or power, right? Mm-hmm. Power Africa it looms large in the current administration's remit, maybe only in their perspective. But one of the reasons is because we're a nation short on capital. We don't really have the money to do a lot of infrastructure financing in Africa. But we've got plenty of venture capital to turn in that direction. That's why. That's one. I can turn to connectivity in a moment, but I think I've spoken my moment. So let me ask John to take on.
Well, I totally agree. It's certainly building a company from almost any country in Africa, your number one enemy is the brownouts and the blackouts. But I think what would be more useful and what will get more capital flowing to the continent is either intermediaries in the financial sector to provide some visibility and due diligence on the companies that are being invested in, or public sector counterparts that could help facilitate that process. The number one reason why there isn't more capital going into the continent is the lack of confidence in Western investors about what's going to happen after the capital gets there. There's just nothing they can do, and there's not a whole lot of resources out there to do what's called discovery and find out what's going on, you know. And it's still a huge problem. I haven't seen very many solutions sort of pop up in that space. And until that happens, it's still going to be the slow trickle of capital to the continent that Jonathan just spoke about.
So those legal and regulatory reforms for improving, for example, protection of investors are really kind of a crucial aspect for boosting U.S. investment and U.S. participation in these sorts of...
Yeah, and I also think, you know, from a policy perspective, I was reading something the other day about this talk of finally sort of an African Union for at least for traveling within
an EU passport,
intra Pan-African travel. I would like to see something like that for the private sector to do business with one kind of like overarching entity, and then let that entity deal with the intricacies of all the various countries and domains across the continent.
Okay.
Okay, you speak about domestic capital, which is very interesting because our last two funds have had increasing participation, particularly from Ghanaian pension funds and Nigerian pension funds and Moroccan banks. Now, they have a lot of money. The Kenyan pension funds have a lot of money too, and they want to invest it. So what would be very useful is if someone gave them some, either they could come here and hang out at CalPERS or New York State Common Reserve Fund, Retirement Fund, or if someone were to go there and explain how does this work. So our first investor conference, our lovely Ghanaian pension fund came and said, where's our money? You know, we invested last year, we haven't had a return in 12 months, and we had to say, whoa, the J curve, you know, it's going to take 5-10 years before you get any money back. It's expensive up front. And so that took years, though. That one tutorial did not work. They were upset. They're coming in again now 7 years later to our fourth fund. But I don't know, even our pension funds in the U.S. are very thinly staffed. So that's one thing I would think of. Then for the venture pools, you do have a new class of African billionaire, and you mentioned Ubuntu. They're one of our biggest investors, Mark Shuttlesworth, who was a billionaire out of South Africa, put a lot of money into two of our funds. But they are spawning their own venture capital funds, and every day I read about a new tech fund or venture fund or something. So it'd be great if we could team up. So your Silicon Valley investor and your African. And then from my perspective, what do we need besides growth and energy and lack of brownouts? We need some business plans. So when we go and look at companies, if the business plan is kind of a shoddy PowerPoint or a couple of pages with a dream, that, you know, no one's investing in that. They could use some real expertise from the Valley on how do you make a business plan, how do you sell it to an investor, and how does that go forth. So.
Well, in terms of building up that sort of capacity, I mean, obviously, this, one of the hot topics in tech and sort of in Africa more generally is entrepreneurship, particularly in terms of giving youth the opportunity to kind of pave their own way, not having to rely on the public sector as they traditionally did for employment and things like that, and all of the sort of positive externalities that brings about. So, is there a role here as well for U.S. capital and for the U.S. government to encourage entrepreneurship, and if so, what sort of kind of capacity building schemes can help that?
So I unfortunately, perhaps misguidedly, I take a very dim view of the U.S. government in teaching entrepreneurship to anybody, and that's not that's not even necessarily a knock on government or even on public service. It's just understanding that you are able to train best on the things that you do every day, right? So the models I've seen out of the public sector, let's talk, I mean, clearly in the private sector, I do see that, and we just spoke of it, right? But, as I say, our audience is largely public servants. I think there is a powerful role to play in this regard. One is and I know this wasn't quite on question, but exactly what was referred to is supporting in the enabling environment, and particularly on the topic, the enabling environment for innovation. Again, the U.S., just as the U.S. brand for venture capital is strong, the U.S. brand for an innovation enabling environment, innovation regulation, is very strong. The American government is very credible on that topic. More credible maybe on some of the topics on which we proffer advice. So I would think that to me is a strong opportunity for the public sector. The other, I was going to talk a little bit about providing funds or partial credit partial guarantees and other backstops like that for innovation. But I frankly have a little. I don't know that I have seen the data that tells me that that's credible. That's credible. It may be, and the U.S. has done that in the past. OPIC has had funds, right, that it's then put out to capable fund managers. And I'll let again. I think Carolyn might have something to say about their capability as an investor in that way. I mean, certainly there are American DFIs that have done that, development finance institutions. Again, I'll pass to my peers, but say that this enabling environment for innovation is very much missing. It's very much of the moment now because those laws are being written right now. And sometimes they're being written out of fear, right? There's a lot of legislation coming around holding data within individual countries of ensuring of intellectual property laws or the absence of laws that are undermining innovation. And I think that the U.S. government opportunity to support sound innovation policy is, to me, the most obvious strong foot forward.
John, you've obviously been involved in this a lot, particularly now that you were saying one of your ventures out there you now use as sort of an outsourcing destination for work now. To what extent are you seeing these kind of entrepreneurial initiatives take off, really kind of among young students and recent graduates and things like that?
Well, I think very much so. I mean, it's absolutely an area of interest for them. But to just touch upon the last question, a few years ago I was a part of a partnership with the U.S. Department of State, who I had a small fund. I was investing in African technology companies, and we forged a partnership called Apps for Africa, where they obviously couldn't invest because of the nature of the State Department, but they could support and enable this program where we went around the continent, and this partnership allowed me to discover a number of companies. They got the benefit of sort of supporting entrepreneurship at the grassroots level, and it was very successful. So we funded 16 companies out of that program, and I mean, it's not great conversion, but 2 of those companies still exist. They're still one of them now has about 20 people. We invested a very small amount of money in this. There's a Ghanaian company called Farmerline. We put in about $5,000 specifically because of that partnership, and they've just skyrocketed. I mean, it's been absolutely great. And then the other one is a company called iCow in Kenya, which is not doing quite as well, but still there, still doing well, still very relevant. And so I think that's absolutely the way I would like to see, our public dollars supporting African development. Is just like, where can we support what's working and how can we accelerate it and not sort of get in the way of what happens after that?
Yeah, another strength we have, I love these strengths that you've mentioned in terms of the venture capital industry in California, is our business schools and how we form the next generation of business people in the U.S. So we've sent 6 analysts to Harvard Business School that have worked with us. And when you go to the Africa clubs at any of the business schools across the U.S., those are your next generation entrepreneurs. And if there was something to do with them to explain to them how the backdrop works here, I think there is a natural affinity between the U.S. and Africa that doesn't exist between any other regions. You see the East Asian, or the Asian sovereign investors, they're going to fund infrastructure. The U.S. isn't. OPIC will a bit, but the big dollars and the long, patient capital will come from other places probably. But you see that we love Africa and they love us in a reason that's different than a mercantile reason that is inspired, when you think of the European-African relationship. we want to help just because we want to help. The French are going to Abidjan to do business. Absolutely. That is not even hidden as their main motivation. So to the extent we can form links with these young students that come here and who probably already have business models and they're starting businesses, we could really influence policy that way, because they're going to go back to their home country, start up these companies. They'll know how to raise money from the Valley, but they might not know what to ask for from their home governments in terms of what do they need as a backdrop to their businesses, whether it's pole rights for a cable company, unlike the infrastructure in Georgetown where every telephone pole has about 1,000 wires, 90% of which don't work. In Kenya, they want one wire. They don't want that kind of mess going on, so they're very, very careful about how they're laying out their infrastructure.
So Carolyn said something before that that I wanted to come back to, but it occurs to me because just before I came here, I was arguing with the cable company about why they needed 2 cables into my house and why couldn't it be 1. So there's Kenya leapfrogging over my house yet again.
Way over.
But something else that Carolyn mentioned that it reminded me actually of an enormous area of public policy influence to affect African entrepreneurship that people rarely talk about, and that is immigration policy to the U.S. We talk about this not nearly enough. We have a habit of taking the best talent from the world, bringing them into our education system by virtue of our phenomenal tertiary education system here, and then frog marching them back to the airport. That's unimaginable for us and for them. The best thing we could do for both sides is let that talent work here for a few years, and perhaps even longer if it wants. This is always highly productive talent, but let that talent cultivate here, learn from our entrepreneurship, learn from our technology cultures, grow strong, and then return to their home countries. That's a force multiplier that costs nothing in terms of U.S. taxpayer dollars, generates enormous strength in terms of our future relationships with that country, and has this enormous development impact. And we rarely tie immigration policy to development impact, as we should.
Yeah, that's an absolutely superb point to make, and I think probably a rousing point on which to open this up to questions from the audience. And yes, we have quite a few.
Sekou Kalin from the New York chapter. I just have a quick question. As you look at the continent where you've seen, tech take off, or, again, entrepreneurs, et cetera, what are some of the anchoring factors? As I think about it, you talk about Kenya. So is it multinational corporations? So Jay Ireland, CEO of GE Africa, he's based in Kenya. Is it entrepreneurs? Strive Masisawa with Econet, has he fostered, a lot of innovation? Or is it governments like, Paul Kagame, President Kagame from Rwanda? Or is it all three? So do you see, or is it none of the above? But is there an anchor that helps more easily facilitate, these entrepreneur or tech opportunities?
Well, I mean, I think it's really hard to answer that question because it takes a little bit of everything, and it's really hard to give any credit to any of those things. But if you use Paul Kagame as an example, he's got a very different approach to how he wants to foster innovation in his country. I don't think it's wrong per se, but I don't see I don't hear from very many Rwandan startups. I hear a lot from Kenya. I hear a lot from Ghana. I hear a lot from Nigeria. Pretty much there's a lot of other places where I think the factors, the way the country operates, the way the private sector is allowed to operate freely, that actually stimulates a lot of innovation and startup activity. In governments where you have a lot more control, Gabon, Rwanda, I just don't see it. It doesn't mean it's not coming, but we don't have the evidence yet.
Got a question here up in the front row.
Thanks. I guess the question is for John or Carolyn on the early stage or late stage mature capital raising. What are some of the unique challenges you see, especially from the international investors in the United States, and whether there's concessions or unique terms that you're putting into these investment agreements that you wouldn't maybe see for a domestic company here? And can you just talk about that fundraising as it pertains to that perceived or real risk or greater risk in Africa?
Mm-hmm. Okay, so first, if I just comment on the last question, I mean, I do see three pools of capital, or three pools of innovation that I see driving sort of the African innovation. Homegrown innovation from companies that are on the continent, small companies that are launching, and some of them larger companies, IHS, like the Carolyn's company's now in. It's an innovative company. Pardon me. As you said, multinational corporations multinational corporations bring innovation, both innovation capabilities and capital in. I think GE is good at this, but it's an exception. And even GE, I would say more of the innovation is coming from India over into Africa than in Africa itself. Jay may be upset at me for saying that, but I think I see that more. And they're amongst the leaders, but IBM and Barclays, to use a British example, are doing this well, but most companies do not. Right? Innovate in Africa for Africa. And the third is sort of outside in. That is to say, companies, not large companies, but startups and innovative tech companies that are in Silicon Valley or in Auckland, New Zealand. I'm just thinking of two in particular that innovate, that are finding that the innovation they're bringing forward to the market comes forward best or fastest in an African context. So Zipline International, take one, is a drone company based in Silicon Valley. They had no plan to get into Africa, but the launch of their first program of their first significant commercial drone program is in Rwanda, because Kagame, to his credit, felt that they wanted that kind of technology there, wanted a demonstration project, and created the enabling environment for them to get the millions of hours of safe flight that they needed, that they were finding hard to get in California. So, all three of those pistons, sort of, in my view, need to be synced up and firing to get where we need to go. But I thought what John said about government and government control pretty interesting and contrary. It's interesting. Then the question was about, so quickly to the question of particular concessions around fundraising. No, I don't. At least when I've talked to investors about raising funds either for a specific company or for a fund, and I've done both of those things, that is Africa focused, I don't find that they want any particular conditions. I find you have to address their concerns about risk. The biggest concern that they have, though, is distance. There's this adage there's this adage on Sand Hill Road that you shouldn't invest further than you can drive for anything you can't drive to. Well, in Africa, that's going to lead you to a pretty small number, and on a bad traffic day, it's going to lead you to the people just on either side of your house, right? So it's less an issue that I've found, at least, around concessional financing or special concessions for the capital, right? Special terms, than it is overcoming certain preconceived quotas of investing, like that one, or like the aversion to having employees or human-based systems. That's another one that I think is very common in Silicon Valley that I don't think really flies in Africa.
Carolyn?
We find on the structuring part that our term sheets and our deals are just like they are in the U.S. or anywhere else. So the term sheet looks just like a Series A, if it's a Series A or a B or a C. The only area where we probably have a stronger approach in Africa is on the exit, just because it's a little weaker environment. You don't have the stock market. There's not a ready pool of buyers necessarily. There are a lot of buyers around the world, but they're around the world. You have to find them and make sure it's the right sector in the right country and so forth. So we particularly bolster up the exit rights that we have. And then on the fundraising in the U.S., that's been a very interesting experience for us. So our first fund had very little. We had El Paso Energy that on a fluke gave us a big allocation for Africa, which I think the guy didn't do very well internally there after he did that, because it was so out of their strategy or mandate. And we had AIG, and AIG is no longer the big investor that it was. But after that, the money wanted a track record, and they wanted an institutional manager of the money. So now we're on our 8th fund. We think we're looking kind of institutional at this point. But the perceived risk is still huge. And what you get when you go to the endowments or the pension funds in the U.S. and you ask for $50, $100 million is, how am I going to due diligence this continent? Box the risk up to one page for me, because I can't start, for all the money they have at CalPERS, they don't have a huge team. That's why they're reducing their managers. Or San Francisco, cities retirement funds. So they want it sort of packaged, and Africa isn't a one-page risk analysis. The risks in Nigeria are completely different than the risks in Kenya, and the opportunity in the north of Africa is completely different than it is in South Africa. So that might be the distance. It's far, it's huge. There's 54 countries. There's an Anglophone region and a Francophone region. But they keep kind of waiting. And I think once one goes, there'll be a lemming effect, because they'll say, hey, they did the due diligence. They took the risk. That guy was institutional. You know, let's do it. And I think that we're about to tap into that, personally.
And I think in this you're hearing a little bit of a difference between private equity investing and venture investing, right? So I actually find that the tech community, including those who have invested in it, are remarkably well suited to Africa, because they both deal with uncertainty very well, right? And by that I don't mean risk. Risk is calculable, like you roll a die and you know what the risk is of it coming up 6, right? But uncertainty is incalculable and unknown set of outcomes. The tech community in the U.S. is well suited to that, and that actually defines what's going on in a lot of Africa, at least with smaller ventures.
Yeah, and I don't think it's for lack of interest. I mean, I hear a lot about Africa when I'm in the Valley. I'm flying out there tomorrow. The conversations are more about how do we get in, where are the opportunities, how do we due diligence these opportunities, and so on. And then it just kind of just simmers down. Like there's always this kind of push, and then no one ever wants to take the leap, because I think they get a little overwhelmed. And so I think the best thing that's happening for Africa right now is now you have counterparts. You have tech companies that are rising up and they're succeeding and they're getting visibility, and so now they're finding partners in the Silicon Valley entrepreneurs who they don't have to take the risk of taking their own company there, but maybe they partner with a company like Brick or a number of the other African tech startups that are starting to get some visibility.
Great. Got a question over here in the front row? Sorry, I'll get some more depth after this one.
Yeah, quick question on official corruption, and then another one about traffic, actually. How has official corruption come to affect the work that you guys do? And then in terms of the fate of the startups that make it out of your organizations out into the real world, into the wild, how much is corruption?
American corruption or
corruption in Africa.
Yeah.
How much has that led to the failure of some of your startups? And then on traffic, I've spent a lot of time in Uganda. My parents are from Uganda, and so, John, I'm sure I've seen some of the craziness you've seen. How does that affect the actual functioning of business when you can't get anywhere on time?
That's some pretty broad-ranging questions. Carolyn, do you want to start off?
So the corruption point's another interesting and contrarian point for Africa, because I had a background in New York and London and then in Eastern Europe before I came to Africa in 2000, and I saw so much more corruption before I got to Africa, I can't even tell you. In Eastern Europe, there weren't even any share registers. There was this guy, and no bank accounts weren't even really kept or whatever. So that was a bit of a myth. But the second thing is we really operate in the private sector, so we're not getting into the government sector. Yeah, they issue GSM licenses or banking licenses, but those are all now highly regulated by transparent, often regional organizations in Africa, and I don't see any major corruption. We've had now, of course, after almost 20 years, have we had a company where we had a manager or a sponsor who wasn't on the up and up? Yeah, and you have to deal with that and remove them. But it's been relatively low, and look at Nigeria's new president. He's gung-ho against corruption. So, and then the second point about the traffic, so I was in Abidjan this week, and it was great. The traffic's flowing. They built a new bridge over the lagoon. It gets better and better. Lagos, however, you make a 3-hour window for when you'll actually get to the meeting. You're better off on a phone call, or you start the meeting in the car, and everything's 2 or 3 hours late. That's just sort of what happens, and that is too bad. They definitely need to deal with that. Kenya, and it is really market by market, but if you guys have been in a meeting in Kenya, the driver now takes you off the main roads, and you think he's going somewhere with you that you may never return from, but you emerge in some great place. They're using Waze. Waze is working all over there. So
I always had this fear when I was doing business in Uganda that I just feared working with the government at all. I didn't talk to anyone from the local government. I didn't go to any meetings where they would be, because I just didn't even want to be on their radar. And I figured if I could stay under their radar, we could just survive, and just survive, for lack of a better words. But the company that I started there now is it's like a destination for anyone doing anything with tech in Uganda, in Kampala anyway. And I started to rethink that. This was after I left, but I was talking to the manager there, Barbara, and I was like, I think I was wrong about that. I think that you are building a resource here for your fellow citizens. This could be a resource for NGOs. It could be a resource for the private sector. It could be a resource for the local government. And if we figure out the best ways to make that relationship work, then I think it was an unnecessary risk on my part. I think that we hear a lot, it's just bad marketing for Africa, right? Like, we hear a lot about the corruption. Some of it is real, but just like everything else, there's also a lot of hype, and that hype can be more intimidating than the reality. The traffic hype is real.
So I agree with everything that's been said, and maybe I'll add to it by turning the question a little bit on its head and talking about how technology is a solution to both those problems rather than its victim. So you heard Carolyn refer to it. There are a variety of ways in which technology is solving the problem of traffic, both literally with Waze, and I've also experienced going to the depths of a back road with a Kenyan Uber driver, and there's another one, Uber, only to emerge exactly where I was supposed to be, exactly when I was supposed to be there, right? So both ride sharing and then the improved traffic technologies. And IBM's lab is working on really innovative ways of gathering big data and applying Watson to the problem of traffic, right? So you do see that happening. But that's sort of intuitive. I think if you just think about that for a minute, you'll see that it works. But what you may not realize until you see it is the incredible contribution of technology to solving the problem of corruption. Technology and automation creates a trail, and it reduces the opportunity for corruption. Every point at which a human being does something that is not tracked in some ways, the opportunity for rent seeking, large and small. So take a small example, the ports and automation of port entry, both by sea and by land. When that gets automated, when we know what truck is coming in with what bill of lading and what truck left with what bill of lading, in what order they arrived, you've eliminated a vast tax on the entire economy, because it means no one can extract value from it. No one can extract value from it and put it in their pocket. When you go to the Bureau, I remember I spoke to the people who were automating the Bureau of Land Management in Kenya, and they were getting death threats, right? From whom? From the file clerks at the Bureau of Land Management. Because once you turn that system to where anybody with a cell phone can search for their title and download, if they go to a kiosk, they can download that title. It's eliminating a vast tax that existed on the country where you had to pay for that, right? So technology is not just the victim of these two problems and many others. It's the solution to those problems.
I think we're running out of time, but we got room for just probably one more before I risk the wrath of Carrie Kramer. Nate.
So, hi, Nate Chaffin. As someone who has lived and invested in Africa, I always appreciate these panels where we're talking about the good side of what's happening, especially when that is not the perception. But among practitioners, maybe we can talk about some of the other sides to things. We try to ignore or try to avoid interaction with governance. As you said, I don't deal with the government. And then if you're investing in Kenya in 2007 or the Ivory Coast in 2002 or Mozambique or Burundi today, any of these countries, suddenly it becomes your problem. So is there anything, do investors have an obligation or an opportunity to contribute to long-term good governance in Africa?
Saving the hardball questions for last, apparently. Who would like to take that one on?
I'm going to pass.
I think my perspective is there's absolutely an opportunity for that to be the case. Should it be a requirement? No. But it's a way of sort of managing your risk as you're investing, to have some sort of relationship, some sort of visibility into how the government is operating and thinking about things. You might be exposed to political uncertainties that wouldn't be visible if you didn't have the relationship. And so I think it's necessary. I mean, especially when you get past the sort of tiny startup stage and you get to the level of where private equity is interested, it's almost impossible not to have some exposure to the government, regardless of where you are.
We in our companies always just, not a policy, but we have at least one senior eminence grise from the local community, and they always have some relationship with the government. And it's funny you mentioned a civil war and a coup d'etat. We have been since 2000. We have been through 2 of each, civil wars, coup d'etats, and we ran and still run the electric and water utilities of Ivory Coast since 2007. So we came right through that little civil war. We had an airline there during the initial coup d'etat in the early 2000s, but during the Civil War, they commandeered our utility, right? They came right on in. So we had to answer to the U.S. government and the EU, and of course we had to do something with the government. But we have a whole government relations department of that investment there. And for cable, as I said, our cable company, we have to talk to the government about poll rights or the banking licenses. We are having to meet capital adequacy requirements all the time. So yes, are we giving tutorials on good government to the government though? No, we have our lobbyists. If we think something's wrong, like Kenya's competition commission is a bit zealous. You take a stake in almost anything, you got to get through them. Even if it's the first company, or regardless of market dominance. So you do need to know what you're doing, but I'm talking day to day. Are we, hanging out with the commissions inspector or the customs guy and greasing his palm, and nothing like that, no. I would have to say we're very similar to Jonathan, that we want to.
I think that probably is a good note to end on, sort of flagging up that there are obviously still risks and obstacles in terms of just kind of generally doing business in Africa, but also more specifically in the tech sector, but also that there are obviously a host of opportunities as well, and more importantly that if you go into looking at Africa tech initiatives with a different set of metrics and indicators than you might with a Silicon Valley firm, the sort of ranges and the options that you have available to you are sort of numerous. So with that, I'd like to thank our panel for taking the time out on a Friday afternoon and joining us here, and obviously thanks to the audience for asking some really good questions. So give them a round of applause, everybody.
Thank you.
We have a small gesture, as a small gesture of appreciation, we have for you guys signed pen and pencil sets with the inscription Harry Truman's signature.
That's fantastic.
So thanks again for joining us.
Thank you. This is nice. Yeah.